episode we will dive deep into our exclusive liquidity sweep trading plan that might revolutionize the way you approach the market. So let's get started. This trading strategy consists of 3 basic steps you must follow. Firstly, spotting a valid single candle liquidity sweep pattern on the higher time frame. Moving on to the second, zooming into lower time frame and searching of reversal patterns. Third step, setting up entries based on fair value gaps and order block. Firstly, bearish liquidity sweep pattern. In the bearish scenario, bearish liquidity sweep pattern is formed by a single candle that sweeps out the liquidity above the previous high. This particular pattern tends to occur.
Recommended broker is Longhorn FX. It's an ECN broker dedicated to delivering a superior trading experience to traders.
Just before a rapid and significant downward movement. It is crucial that the price sweeps the liquidity of the highest point of previous structure by only one candle body or wick. Additionally, the subsequent candle's body or wick should not exceed or close higher than first candle's body or wick. We want to see an immediate reversal in price direction, with the price returning below the high after the sweep. Secondly, bullish liquidity sweep pattern. In the bullish scenario, bullish liquidity sweep pattern is formed by a single candle that sweeps out the liquidity below the previous low. This particular pattern occurs just before a significant upward movement. We look for a liquidity sweep characterized by a long wick or body followed by an immediate push to the upwards. The subsequent candle's body or wick should not exceed or close lower than the first candle's body or wick. Psychology behind this strategy. Let's take a look at the psychology behind the strategy. This will help us establish a solid understanding of how price movement occurs in the market. To illustrate this concept, let's suppose we have structures like this that simulate price movement. If we take a look at the structure, we can see the price initially experienced an upward movement and broke the previous structures to the upside and has created bullish break of structure. Additionally, created these demand zones, each for the capacity to potentially reverse the price direction upon its approach. Following the sweeping of external liquidity, the price changes its direction to access internal liquidity. This action aims to fill the gaps that were previously left unfilled. In the subsequent, we can see price to push downwards and reach the upper demand zone and formed a tiny upward reaction, which is attributed to the buying pressure of traders who entered the market with long positions from this zone. This minor pullback further induces more price action traders to enter the market by going long and placing their stop losses below the demand zone. We can see that price pushed lower and already swept the liquidity below the recent low with a valid bullish liquidity sweep pattern by using a single candle's body or wick, followed by an immediate push in price to the upside with the price returning to the range above the low after successfully clearing the liquidity through the sweep. So we've identified a valid bullish liquidity sweep pattern presenting a high probability opportunity to potentially execute trades. If you enjoy the content, please like the video. Why do we consider this pattern as a high probability setup? We consider this pattern as a high probability setup because in this scenario the liquidity below the recent low has already been swept. This means that many stop losses have been triggered, leading to a sharp increase in buying pressure. Additionally, the price has started to move upward with significant momentum indicating a strong bullish bias. What's the core mindset behind the strategy? The core psychological principle driving the strategy is that when sell-side liquidity is cleared out through liquidity sweep, the price has been drawn towards the buy-side liquidity, which is aligned with its prevailing direction. When price sweeps liquidity on one side buy or sell, it often triggers a shift in market sentiment. Now shifting our attention to a lower section of the screen, we come across an order block located at the extreme. Now, the question rises, will the price head towards the extreme demand zone or will it reverse? After creating a confirmed bullish liquidity pattern, and notably in this scenario you don't have to wait for the price to reach the extreme order block before entering. However, in the scenario price ignores the lower order block and instead create a bullish liquidity sweep pattern, and it shows a change of character on the lower time frame and sharply moves back to the upside. So, now we have identified a valid bullish liquidity sweep pattern. Our next step is to switch to the lower time frame and closely monitor the price movement and patiently await the formation of a valid change of character pattern. After detecting the confirmation of market structure shift on the entry time frame, we can set our entry position on the newly recognized order block or fair value gaps attributed to the change of character. When these conditions align, we consider a long opportunity with our targets set at the external liquidity, which serves as the take profit level. Don't forget to hit the subscribe button. Furthermore, if the price fails to make any bullish movement and also it's a stop loss, our attention shifts to the order block situated at the extreme. This order block becomes our high probability demand zone for a buying opportunity. The reason behind this is that the price has already utilized the upper demand zone as an inducement area and successfully sweeping the substantial liquidity accumulated below that zone. This liquidity primarily generated by the stop-loss orders of traders who entered the market aggressively with long positions. Our next step is to patiently wait for the price to reach the extreme order block. Once it reaches this level, we can consider entering a long position after the creation of a valid change of character pattern on the lower time frame. Now it's time to move into real chart examples. We can see that price sharply cleared the liquidity above this high with a long wick. Following this, the price immediately reversed and closed below the highest range and created a valid bearish liquidity sweep pattern. So we have identified a valid liquidity sweep pattern in the 15-minute time frame. Now our next course of action is zooming into the 1-minute time frame. Here we have the 1-minute time frame chart. As you can see, price created a perfect change of character by breaking below the structure to the downside. Now moving on to the next step to highlight the order blocks created by the change of the character. I'm placing sell limit orders at the lowest points of both order blocks, and for the take profit targets I've decided to set them at this recent swing low. Let's see how the market reacts and see if the trade setup play out successfully. Let's look at another example to set an entry. In the 1-minute time frame chart, I am going to identify the order block generated by change of the character, and moreover we can also identify this fair value gap position just below the order block. When facing with these scenarios where order blocks and fair value gaps coincide, the best option is to position the entry point at the midpoint of the zone, including both the order block and fair value gaps. I position a sell limit order right in the middle of the zone to maintain a strong risk management strategy, and the take profit target is set on this particular swing low. Our sell order has been activated, and after the activation of the sell limit order, price eventually reached our take profit target. Thank you for watching. Please like, share and subscribe for more informative content.